IFRS 16 is leases, as we can see. So we must know the meaning of lease. So a lease is a contract or any arrangement that conveys the right to control the rights to use an identified assets set for a period of time, or a given period of time for the extent of the extent of consideration. So having known the meaning of lease is a contract that involves conveying, giving out an identified assets, you understand, to another person, giving the right to use it in the consideration of an exchange, you understand. So what we mean here is, in this lease we must have a lessor. A lessor is the owner of the assets, and we must have a lessee who is going to pay for acquiring, is going to make the term payment or periodic payment. Same thing. He makes the payment to the owner. This is the legally owner of the assets. He leases it to the lessee in payment of certain amount of money, usually annually. So after knowing this, it is good for us to know the differences between IAS 17 and IFRS 16. This IAS 17 is the old standard. We all know that IFRS are out or are there in form of new standard. They replaced IAS standard. Any replacement or adjustment to IAS standard, it will be replaced by IFRS. We all know that. So now IFRS 16, the differences is that this IAS 17 allows the lessee to classify the lease. So in this IAS 17, the lessee, this is a common difference, identify or classify lease as either operating lease and finance lease. So this IFRS 16 says no. They are the one, or is the standard that is going to set out the way the lessee is going to recognize the lease, measure the lease, and disclose the lease. Very simple as that. You understand? So now this is what leads to replacing this old standard to the new standard, which is IFRS 16, to allow not to allow the lessee to be classifying the lease as either operating or finance lease. You understand? And the lease, the lessor, the IFRS 16 does not change the way the accounting for lessor is. They still classify it as operating lease and finance lease. So that is why the emphasis is made on the lessee account, because you already know how to deal with the lessor accounting in ISS 17. You understand? So whatever we're going to be doing, it is going to be based on the lessee account as for now. So after knowing this, we'll now say how a lessee, how will he recognize the lease, how will he measure the lease, and how will he disclose the lease. And that is what lead us to explaining and even teaching the accounting that has to do with IFRS 16. I hope you understand, because it's a new standard that says that the lessee should recognize, is the standard set out for the lessee to recognize, measure, and disclose the lease. You understand? So when we proceed, we're going to pick the recognition. We say recognition. Recognition. Good. So when we talk of recognition, we mean we have to recognize this at the commencement date. The recognition is at the commencement date. The measurement is at the recognition date, is at the commencement date, like that. So when we take this as number 1, 2, and 3, please listen attentively, pay attention. So now the recognition is at the commencement date. So what do we need to recognize in the lessee accounting? We have to recognize 1. I hope you're following. We have to recognize the right of use. Right of use assets. This is as our assets. And secondly, we have to recognize the lease liability. Which is our liability. See the changes. We have to recognize this. The right of use asset, our assets, and the lease liability, which is our liability. I hope it's clear. So now, after knowing this, we are still on the recognition. We have recognized this as the lessee account. Right of use of asset is an asset, and lease liability. Now let's look at the measurement. How are we going to measure it? So the measurement, as I've said, is at the commencement date. Is at the commencement date, and the measurement for this right of use assets, right of use asset comprises the lease liability. To measure the right of use asset, you must add your lease liability, and you must add any payment at or before the commencement date. Commencement date. This is very simple. And you less any incentive. You less any incentive. So this is what we need, and they are also called the component of right of use asset. So if we're going to look at it, we say right of, want to account for it, right of use assets, let's say in dollar. I hope the following. Then these are the components that we are going to arrange for us to arrive at our right of use assets, the amount. I hope you understand. So now we now say a lease liability. This is the format. This is your lease liability. Then if there is any payment made by the lessee at or before the commencement date, you add it. I hope you are following. Then lease, either the lease incentives, you less it. You less any lease incentives. We're following this format. This is a component. Then if there is any initial direct cost incurred by who? The lessee, you add it. How you're following. And any estimated, there is any estimated dismantling cost incurred by the lessee, you also add it. At this stage, when you add it all, you arrive at the total amount of right of use asset. Very simple. I hope you're following. So the right of use assets, lease liability, any payment made or any cost at the commencement date, then you less incentive. That is what we just arrange here. Lease liability is there. Any payment made at or before the commencement date by the lessee, you add it. Lease incentive, you add it. You less it. You're going to add all the expenses. Then you less any income. You less any incentives. You less it. Initial direct cost incurred by the lessee. You less it. You add it. Then you estimated anything cost. You add it. That is simple as that. This is how to determine your right of use assets. So let's go to, we say there are two. I've cleaned it. We say two. When you recognize two items, the right of use asset and the lease liability. The lease liability. This lease liability, is almost the same thing, but here the fixed payment, that is the annual payment in the arrangement or in the agreement, assume we say you'll be paying 33,000 every year. This is fixed payment. Then, and it is a liability you'll be paying. Is that also? And then lease, you less lease the same thing, incentive, then you add any other variable payment. You understand? So when we come to the practicality, when we want to practicalize it, we say our lease liability, draw a line, we put our correction sign in dollar. So we say fixed payment. This fixed payment, periodically, we put it here. Your lease liability is the same thing, liability you add it. After adding it, then your lease incentive. You know we're going to less this. You less your lease incentive, then your variable payment. This is in case to capture the time value of money. Then you put it. Then your any expected residual value guarantee. Residual value guarantee. We put it. Then if there is penalty for terminating the contract, if there's any penalty, you add it. It's an expense. You understand? So you now add it. You less your lease incentive, you add everything, you arrive at your lease total amount of your lease liability. You know, ICANN is very smart. They are always smart ahead. That at times they want to test your level of understanding. They want to produce world standard chartered accountants. So they try to test your ability to see whether you are good to go. So in that case, if this lease liability, the component of this lease liability is not given, you have to look for it. You have to look for the lease liability. And in looking for your lease liability, we have a formula for that. Don't forget, they might test you in this way, without all these components that will guarantee or warrant you to arrive at your total amount of your lease liability. You must look for it. And in looking for the lease liability, I say we have a formula. Our lease liability, LEB, the formula equals to annual lease payment times the annuity factor. This is our formula. Our lease liability, LEB, is equal to annual lease payment times the annuity factor. We all know the annuity factor and how to calculate it. Why are we using the annuity factor? Is because the installmental payment is usually an equal amount. As we give example here, we say fixed payment of 3,000 per year. So that warrants us to go to it and use the annuity formula or factor. Now, in the question, the ALP will be given, assuming as we set 3000, and the annuity factor not be given, and you must go straight and look for it. So now our annuity factor, so that if you get it, we come and put it here. We say 3000 times whatever we arrived at. I hope you understand. The annuity factor formula for it, we all know this formula is 1 minus bracket 1 plus r over negative n over r. Our r is the rate of interest, or interest rate, rate of interest, or interest rate, which is implicit in the equation. Implicit in the equation. You understand? That is, the rate will be stated in the equation, assuming they say at 5% interest rate. This is an interest rate implicit. Then the n is the number of years. Number of years. Simple, we all know this, even not now. So I'm just trying to put it for us. So we'll now come and say, let's assume from our example, we say the R, which is the interest rate, is 5%, and let's assume the number of years here is 6 years. So if we assume the number of years to be 6, we all have these to fix in. Then we say our 1, the annuity factor is equal to 1 minus bracket, 1 is constant plus the R is 0.05, okay, the negative n is 6. Then also, then over 0.05, the interest rate. It's very simple. So now, we now clear everything. We say this plus this, 1, let's take the step. 1 minus bracket 1.05 negative 6 over 0.05 equal to, when we clear this, 1.05 raised to the power of negative 6 is going to give us 1 minus raised to the power of 0.745. If we approximate, it's going to give us 0.75 over 0.05 equal to our 1 minus, we're going to be left with 0.25 over 0.05, and our answer will be 5. I hope you get it. So the mistake that students do make is when calculating this, when they come to clear the bracket, when you make a mistake by writing the formula like this, 1 minus bracket 1 plus r, raised power of negative n, then you now do like this over r. That means this is not cutting, does not cut across this one. So when you come to add, you will now say 1 minus bracket 1 plus r, and using this example, 0.5 over negative 6. So when we clear it to become 1 minus, I'm just trying to to show you how some students do it and they fail. 1 minus, this 1.05 negative 6, you understand, and 0.05, and they will now say 1 minus this and this. I hope you are getting it. 1 raised power, the raised power of 6, they will now say 0, they will now add it by saying this raised power of this should be 0.75. Yes, yes, 0.75, and they will now, yes, they will now say 0.05, this divided by this, whatever the answer they've arrived or got here, let's assume let's assume 5, assuming, then they'll now say 1 minus 5, 4. You see, it will not give you the real answer. How to do it is to draw this line to this. This is the same. You must first of all clear this before you divide. How you understand? It's together. You can see minus. So don't make that mistake. So if, since we've gotten 5, if we were to take the 5, if we are to take the 5, if we were to take the 5 by saying our lease payment, our lease liability equals to the annual lease payment times the annuity factor, and our annuity factor is 5. Our annual lease payment is 3,000. So our lease liability would be equal to 15,000.